Hi everyone, welcome to our weekly money date. My name is Anna Surgunina and I wanted to talk to you today about a question that I get a lot lately from clients, and given the current market environment and how interest rates have changed, the question is, should I refinance my mortgage or should I refinance my other debts because there may be opportunities created for you in the marketplace. So let's talk about what is there and why maybe perhaps you should consider doing some kind of refinancing. The big one would be obviously around larger debts, but I'm talking about mortgages, if you have auto loans, and maybe perhaps student loans, but there's a big word of caution when you considering refinancing of student loans. Now, before I get into the overall discussion of that, I want you to remember that money dates are designed for you to give yourself a pause, create a space where you can reflect and see how things are in your overall personal finances. Now, I track three things personally for me and suggest all of my clients do the same. They are: know where all the expenses are, know how far you're tracking with your savings goals, and then review your goals, right? Stay on the top of them, because that all together allows you to have that clear path to the financial freedom, right, that you're all seeking, right? We just call it differently, right? We call it retirement, we call it independence and whatnot. Now, where does the refinancing of a mortgage or any other debts come into this play? Now, and this is more of a timely market advice, right? What's going on currently, but it has been happening quite a bit that mortgages, right, or the rates on mortgages have been changing. So they've been changing due to the market conditions. Now, we are due to have another meeting, right, for the Federal Reserve. So Federal Reserve meets 3 times a year to discuss, what they can do and how they can change the rates, right, or economic policy to help stimulate what happens in the market. Now, one of the ways, and currently where we are, one of the ways that they're trying to help stimulate economy, right, because there's a lot of events going on. There's the presidential election, there's the coronavirus, right, there's a lot of worry and concerns out there. So their idea is that perhaps they can make debt cheaper, right, to the businesses, to the consumers, to help grow the economy. Now, it is helpful for us as consumers because we can look at our balance sheets or our financial statements and say, hey, okay, I have a debt that was costing me last year, right, or a couple of years ago when I got it, still phenomenal rate, and the 3 plus, right, 3.5, 3.75, 4% targets, and it was great because these rates, historically didn't exist in the past, but we've come down. So I have seen, right, and if you want a specific quote, I'm happy to provide you with referrals and contacts to mortgage folks that we work here at Main Street. I also suggest call the actual bank or institution where you have your debt and say, hey, what would you refinance my current balance at? Tell me the cost, right? Those are the things I want you to know. Tell me the cost and tell me how much better would it be. So you want to understand going in, what is it going to cost you up front? Because if it's going to be substantial, that rate, right, or that difference in the rate, so if you're going from 3.5 to 3, right? So I've seen as low as 3% on 30-year fixed mortgages, right? I just want to give you like a data point. But how far are you going to come down with the rate, and what is it going to cost me, so that when I have to write a check for closing fees, right, refinancing fees, then it all makes sense, and after a while you actually are better off in your head with getting that that eventually done. Now, the other area that I'm starting to see more and more, and this is if you have, for example, auto loans, right, or personal loans that may be costing you quite a bit. So take a look. I'm not a big fan of refinancing auto loans because I'd rather you crazy fast pay it off and get rid of it. But if you're not in a position to do that, maybe perhaps lowering your rate would be helpful. Something else I mentioned at the beginning was maybe you're in position to take a look and see if your student loan rates are, could be improved with refinancing. Now, something really, really like big stars, right? Big red flags right now going off to make sure that you didn't just jump off the cliff and said, I'm refinancing, but I want you to make sure you understand, right? Private student loans are just like any other debts. They're good to refinance. They're better to be refinanced because you're paying less interest over a long period of time. Federal student loans have special provisions. There are special types of loans. They have special protections, features around them. And when you refinance out of those, you lose all of those benefits. So I want you to be really careful in considering doing something like that until you've analyzed and understood what are you gonna give up for that lower interest rate, okay? So be really careful, please, because I've seen people make mistakes without really realizing that they're doing that and chasing a lower rate, okay? So my homework for you this week is pull out your financial statement, take a look at all the debts that you've got, perhaps even credit cards. Credit cards, would be credit card companies would be open to talk to you about what can they do, right? Given the fact that the rates are lower, and actually not even that. Have you ever picked up a phone and called your credit card company and said, hey, I've been a long-time customer. What do you think about taking a look at my account? I pay my bills on time. Could you offer me a better rate? It never hurts to ask, all right? So my homework for you again, pull out your financial statement, make a list of all your debts. What can you refinance, okay? It may be nothing, but at least you've done your homework and you know that given the current market conditions and opportunities, right? It's not a bad market out there. It's just what opportunities can you create for yourself? Can you see paying less for your debts? All right, let me know how it goes. Let me know if you need any referrals to any of the professionals. I'll do my best. Happy to share their contact information. I'm not gonna post anything in the comments below until you ask, because I'm not sure what you're looking for, but happy to do that. And I would appreciate if you share out this video. All right, thanks so much. See you next week on the next Money Date. Bye for now.